Hello everyone, welcome back to Upside Down Data. Today I want to give an update about our risk indicator for ADA. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you've seen the previous video we put out about this indicator, you'll have seen how it's pretty good at identifying these high risk zones. So essentially the way what this graph is showing you is the price history of ADA color coded to the output of our model. So red, closer to 5 is high risk, green, -5 low risk. And as you can see, just over time, the risk is quite good at identifying low risk zones and these high risk zones where historically exiting the market has been advantageous. So the question that I want to address today is, what does the model think about where ADA stands currently? You know, we just had this run from the summer where the UDPI identified that as being a historically good time to be acquiring ADA, moving all the way up to setting a new all-time high at around $3. So this is about a 3x move that it put in here. Then the indicator suggested that move was unlikely to continue to the upside. Indeed, then we had this 35 to 40% correction off of that to where we stand today at right around $2. So what does the indicator think about where ADA is currently? Does it think that it has a lot of upside potential to realize, or is it suggesting that it's still not necessarily a good entry point? So I think an easier way of looking at this is to look at the raw output of the model and to see what it's saying in kind of the recent price action of ADA, kind of what it thinks about what ADA has been doing most recently. So what you'll see is that we had this big shoot up in the UDPI from the summer into that September run where we put in the new all-time high. So the y-axis here is the UDPI output. So we went from a score of a little bit above -2 all the way up to a 4. So a pretty big move in the risk level. And historically, getting to that 4 to 5 level is when these moves have generally become kind of unsustainable, and then we're either going to get a correction or sideways action kind of out of that. Historically, has been what's happened. What you'll see is that the UDPI has really come down a lot since we had that kind of local top in September, and now we're actually back to about the same level we were in the summer. And now that's not a bad place to be. You know, if we just put in a 3x out of the summer, being at these levels again is potentially potentially a kind of a good sign. So again, not financial advice, but that's just what the model called the summer as being a good time. Indeed it was. So it's maybe reasonable to think that right now could be a reasonable time as well. The other thing I'm looking at currently for ADA has to do with one of the interesting behaviors of this model, and that is when you to look at these reversal points that we see. So you see, for example, coming out of the crash in March of 2020, in November of 2020, you'll see these points where the UDPI will reverse. It'll kind of come down and then do a reversal and start coming back up again. And historically, when that kind of behavior happens, when the model starts doing that, it oftentimes corresponds to bottoms, or at least when a bottom is close. So when this will happen, usually in that general vicinity, somewhere within that maybe a few weeks or so, the bottom has largely come in, and then we'll see a reversal in the price action. And also for tops, you'll see that as well, where once these reversals happen, it usually means that either a correction or just sideways action is likely from there, that the upside potential is kind of faded, and we're likely to have a bit more consolidation or correction. So that happened here in September as well. So the fact that we just had another one of these reversals in ADA as well could be a bullish signal. Maybe that's suggesting that the bottom's in. Now, of course, nothing's guaranteed. Who knows? ADA could crash tomorrow, it could fall, and then the UDPI would come down with it. But if that were to happen, I personally would just view it as an opportunity. If ADA falls decisively below $2, goes down, maybe tests $1.40, some of those earlier support zones, I would personally just view that as a massive opportunity. And the indicator would identify it as that as well. The UDPI would adjust its estimates accordingly and then say that the upside potential has grown and the downside potential has shrunk if ADA were to fall and realize some of its current downside potential. So none of this means that ADA has to go and put in a massive run immediately. Assuming that, let's say that ADA is primed to put in another leg to the upside, that doesn't happen immediately. Maybe ADA is going to wait until some more kind of big fundamental news comes out. So, for example, there's been talk recently about the Hydra Layer 2 kind of upgrade for the ADA ecosystem to really kind of help its scaling. So it's possible as more news comes out about that, maybe when they announce when it's going to actually release, that might bring some more interest back into ADA, and it might have a pump that's kind of what happened here into September. It was really the integration of smart contracts that kind of seems to have driven that pump up until around when that happened, and then we got a correction off the top there. So it wouldn't be totally unsurprising if it might wait for another kind of kick in the pants like that to really get moving again. But of course, who knows? It might not. It could go up tomorrow. It could crash tomorrow. No one really knows. But what the UDPI is suggesting is that the upside potential is currently greater than the downside potential. It's sitting below zero here. And so if it does start moving to the upside, it has a lot of room to go. And, if the move from September is any indication, it could have a pretty decent move in it. So again, none of that's guaranteed. Do your own research, form your own opinions. But that's just what I'm thinking about looking at this model output, what it might be kind of suggesting. So just to take another look back at the price action of ADA in more recent times. Here I just did a screen grab off of TradingView. And really, we've just been consolidating for a couple months now in this kind of general zone, slowly kind of going down, but really just kind of consolidating in this kind of range here around $2, a little bit higher, sometimes a little bit below $2. And ADA kind of tends to do this. There have been multiple times in its history where it's kind of had these long consolidation periods, and then oftentimes that's preceded a big move. And of course, since we seem to be in a bull market right now, it doesn't seem like a bad. I would think it's more likely for us to see a big move to the upside than the downside. Now, of course, we could see a move to the downside. You can never rule that out. But it just seems like, given ADA's history and the current risk-reward ratio that our risk indicator is suggesting, to me it seems like a move to the upside would be a little bit more likely. Again, it's not guaranteed, but that's just my thinking on that. So just to kind of talk a little bit more about where ADA is currently. So the numerical value that the UDPI is currently reading at is a negative 1.11. So what that means is that the upside potential is greater than the downside potential. It's not at these historically, the downside potential isn't historically low like it's been in the past, where it's been kind of historically great to be acquiring ADA before it puts in those really crazy moves. But as I mentioned before, we're at about a similar level we were in the summer, maybe just a little bit higher. And so since we were able to put in a 3x out of the summer, it's reasonable to believe there's a good amount of upside potential that could be realized should ADA start to move soon. And so currently ADA is sitting at a relatively favorable risk-reward ratio, especially given the fact that we're in the middle of a bull market and kind of the market's trending up. ADA seems to be kind of maybe a more attractive option at the current moment. And I think you can really see that when you can compare it to some of the different assets across the crypto space. So here at Upside Down Data, we have risk indicators for a bunch of different assets. So ones for ADA. We're up to 13 now. We're adding more indicators every week. Stay tuned for those if you're interested to see the new assets as we launch the indicators for those. But as you can see, it's kind of a mixed bag right now. DOT is the one that's currently reading at the highest level of risk. DOT is right in the middle of its parachain auctions, which is basically just a very bullish kind of tailwind that's been pushing price up for it. So DOT's currently the highest risk, but a lot of them are kind of sitting out in a little bit more neutral territory. Some like Ethereum are maybe a little bit hot, but nothing too crazy. And then of course a few others that are also kind of in the lower risk zone. But kind of in the general context, ADA does not look bad. ADA is kind of at similarly attractive risk rewards to some other assets. And so if one were to have a strong thesis about ADA, really believes it's going to put in good work, it's looking like a relatively attractive option right now. So again, none of this is financial advice. Form your own opinions, form your own strategies. But this is just one of these are just the things I'm thinking about with where ADA is currently, and also just kind of how it compares to some other assets right now. And so it'll be interesting to see what happens if ADA starts running. And it could be that ADA does what it did back in September, where it kind of led the altcoin market, kind of put in its big rally, then a bunch followed. Or this time around, maybe it'll follow other ones. Maybe other ones will put in a pump, and then ADA will follow before. But what I'll be looking for is kind of regardless of which of those scenarios happens, to full disclosure, I do have an ADA position. So if ADA leads the way and puts in a big move, then I would just look at the risk indicator, see when it starts getting overheated, start taking profits, and then move those profits into a lower risk asset, which might then follow ADA to the upside. And then likewise, if it was a different asset that leads the way and I had a position in that asset, I would just do the inverse, where I take profits off that asset and probably put into something like ADA if it's still sitting at a lower risk zone. And that's just a way that you can use these multiple indicators to start trying to stack your profits. So if you ride ADA for a 2 to 3x, let's say, for example, maybe you can then put that into a lower risk asset, put that into a different asset that's lower risk, and then ride that for another multiples of moves. And then you're really compounding your profits. So again, form your own opinions, form your own strategies, but those are just some things that I'm thinking about right now with ADA and where it stands. So if you like the content, remember to subscribe to the channel, give the video a like, and go and follow us on Twitter. And remember, with the UDPI, we're all going to make it.